Okay, good morning. Today I'm going to go over the Check 180 Platinum program. It's the SPS program, and it's a very, in my opinion, it's a very important program that you should have as part of your arsenal. It has gotten better lately from the standpoint of consumer approvals, and I'm going to go over the soup to nuts of this program, everything from signing up a merchant to how the merchant uses it with their customers. Everything you need for this program is in the back office. For those of you that are new, if you go to the back office, the BCMS back office, you should have your login credentials. It's under the BCMS 180 financing section, and this is the product. It's right here under non-bundled, non-credit-based, no-income check financing, secure payment systems. Everything you need here is right in this section here, and everything I'm going to show you came out of this section. So let me give you a summary of this program. Okay, so I'm looking over here under the Platinum column. It's a no income check program with that requires equipment. It requires a POS terminal and a check imager. It is a non-credit based program. So what does that mean from the standpoint of the consumer? The approval of the consumer is based almost entirely on the checking account. It has to be a checking account in good standing with substantial activity. So it can't be if an 18-year-old comes in and they have a checking account and all they do is use it for their video game subscription. That's not going to work. If it's a checking account that's being used for regular bills, regular expenses, SPS most of the time to approve the consumer. If they can't get enough information from the checking account, if it's one of those on the fence, it's not bad, but it's not substantial enough, they will pull a credit report to try to see if they can push it over the top, to see if there's recent activity, that is showing up on the credit report that's not showing up on the checking account. The credit report will not be used to decline someone. It will be used to try to approve them. So if there's not enough information on in the checking account, and they go to the credit report, and the credit report is everything is 90 days, 120 days behind, they will get declined because there's nothing there. These lenders that offer no credit check program are still doing some kind of vetting. I mean, they're still going through some kind of process to figure out, the risk assessment. So they just do it differently. They're not using credit reports or credit scores. They're doing it differently. So they still have to. This program is a payment plan option for merchants to offer their customers. Okay, so it's not technically financing. We call it financing. It's very convenient. It's much easier for us to understand, for you to understand. But from a standpoint of the merchant, it's really an extended payment plan that they're offering their consumers. So the right type of businesses are retail businesses. It could be a service business. It has to be point of sale. So it can't be done remotely. It can't be done over the internet. It has to be a face-to-face sale ultimately. So it can be in somebody's home. It can be in somebody's shop. Picture somebody coming into an auto repair shop, and the ticket comes out, it's $1,500. They don't have $1,500. The auto repair shop is able to put together a payment plan for the consumer where it's not going to be it's not going to be like they won't need anything, but they'll be able to get the job done with a reduced upfront payment and then payment spread over 3, 6, or 12 months. From a technical standpoint, as far as the merchant is concerned, this is really factoring. What SPS is really doing is they're purchasing the accounts receivable. So they're going to the merchant and say, okay, show me the accounts receivable you want us to buy. And they're going to show this consumer a $1,500 auto repair. They're going to do vetting on that consumer. And based on that consumer, they're going to say, okay, we're going to buy that accounts receivable, but it's going to be at a discount, and here are the discount choices. If the term is 3 months, the discount is this. If the term is 6 months, the discount is this. If the term is 12 months, the discount is this. Now, We give the merchant, I'm going to show you this a bit later, the calculator for them to figure out how to pass the cost on to the consumer so they can end up with 100% of their ticket. Now, they don't have to do it that way. The merchant may have enough of a profit margin. Well, they'll say, you know what, we'll eat the discount. I'd rather get a small, not the entire pie, a partial pie, but make this deal happen, make this sale happen, because I'm making such a high profit margin that I could absorb that amount of money for these type of sales. These are people that would normally be walking out of my store or walking out of my business. I'd rather have it at a discounted at a discounted sale than no sale at all. Or it can be a hybrid situation where they say, you know what, I'm going to split the cost of this transaction with my consumer. So, they're going to absorb some of the cost, and the consumer is going to have a fee added on. That's going to be some of the cost. It can be done any way they want. This is very, very flexible program. Another thing that makes this program very powerful is it can represent any portion of the transaction. So let's say you have a business and it's a $1,500 transmission job, or whatever, engine job. Maybe the customer has some money, just doesn't have it all, or maybe the customer has a credit card that they can use, that they can throw $300 or $400 on, but they don't have it all. So they can use this as a combination package where they take the sale. In split, they could split it. They could split it by taking cash or credit card or some other form, and then use it for the rest of the sale. It can also be used as a supplement to other financing. Let's say you go to one of the shops that offers GE, and they go in for financing, or a business offers GE or Wells Fargo, and GE and Wells Fargo approves the financing, but not at a full amount. It comes in short. They can use this program to supplement it, to get them there, to get them the full way of the sale. So it's really a flexible program. Now, I've been told, and based on the results I'm seeing, the approvals are now up to 70% of the applications, which is very good. And what makes it very strong is, from the consumer side, there's no documentation. All they basically need is a photo ID and a check. There has to be a check with this program. So it's got to be, the consumer has to have a checking account and has to have a check. Those are the only two requirements: photo ID and a check. There's no pay stub. There's no bank statements. There's no tax returns. There's no other supporting documentation. All the vetting is being made strictly on the checking account and what's being run in the background. Now, from a standpoint of a sale, your cost is the equipment. So the cost is if you purchase the equipment through us, it's $295. We'll supply both the terminal and we'll supply the check imager. You're welcome to buy it yourself. As a matter of fact, we encourage it. If you want to go out and buy your own equipment, there's a lot of vendors out there. I can even give you the name of a few vendors. You can buy your own equipment. Then there's no cost to us. You just submit the package. You work it out with the merchant. You keep the difference, 100% of the difference above the cost of the equipment, and whatever you charge the merchant as a setup fee. In addition to the setup fee, the lender takes out $195 about 30 days after sign up. That's their sign up. So they have a $195 setup fee and then an annual subscription cost of $95. So for every year on the anniversary, they're going to be charged $95. On the residual side, your commission is 1% of the amount of the loan funded. That's a 50-50 deal. The total is 2%. You make 1%. The only time that's different is in December. For whatever reason, the SPS has determined, I guess their history shows that the loans are more risky in December, so they only pay us 1%, in which case for all December transactions, you only make 0.5%. This can add up. The merchants that get this program can use it a lot, and so don't underestimate the 1% residual. It will add up. And the setup fee, this is one of those programs that allows you the opportunity to make money, through setup fees. Now, you can also lease the equipment. There's two ways you can lease the equipment. You can go out and get your own leasing arrangements. We encourage that. Northern Leasing is not hard to get set up with. Or you can use our leasing arrangements. We're going to charge a vigorish. We're going to charge a small amount for taking that risk, because there is a risk. If a merchant defaults in the first 30 days, there's a chargeback on that, so there is a risk. So we're going to charge a small amount to use our leasing options. But leasing is a great solution where you can make some significant money, because you charge the merchant a $50-$60 a month even to get this equipment, to lease this equipment, and you can make some nice amount of money. The only other cost to the merchant is there's a $5 per month statement fee, and there's a monthly minimum usage fee of between $35 and $100, and I'm going to show you in a little bit as I go through the application how to figure out what that is. Now, from a sales standpoint, you don't harp on the monthly minimum usage fee as an actual cost, because if you are selling this program properly, you have convinced this merchant that they're going to be using this program. So then the monthly minimum, as long as they use the program once, the monthly minimum usage fee does not apply. So if they use the program once during the course of a month, they don't have the monthly minimum usage fee. The maximum amount that a merchant could finance per customer can go up to $5,000, and I'm going to show you that in a little while as well. Now, keep in mind, if the merchant passes on the cost of to the consumer of this program, the real maximum sale that they can do is about $3,800, maybe $4,000 in some cases. But it's the $5,000 includes all the costs if they intend to pass on all the costs to the consumer. Now, we do have some merchants, if they're strong merchants, we can get approved up to $7,500. The costs are more expensive, but we can get them up to $7,500 on a case-by-case basis. The term that the merchant can offer the consumer is either 3, 6, or 12 months, and I'm going to show you in a minute how the merchant determines that. And it gets more expensive for the consumer and the merchant depending on who's covering that cost the longer the term. So the least expensive is the 3-month deal. That's the smallest discount. The longer the term goes, the discount increases. Customer costs, once again, this is assuming that all the costs are passed on to the consumer, will vary from $11.95 to $32.95, although most of it goes from $14.95 to $30.95. There's only one vertical that spreads that goes to on each side of that spectrum. But once again, it depends on who's covering that cost and the term. So I'm going to go over that with you and show you how to calculate this. The customer docs, as I mentioned, photo ID and one check is all that is needed. Guys, if you guys can mute me out, I really appreciate it, because I'm hearing feedback. Somebody has a lot of feedback going on. Okay, the amount of the initial down payment that the customer makes, or the total transaction, so that includes the cost. So when the final cost of the loan comes out, the customer has to pay at the time of acceptance is 25%. The money will come out of the consumer's account within about 24 to 48 hours. The rest of it is spread out over either 3 months, 6 months, or 12 months, depending on what the customer chooses. So let me go through the application process, and as I go through the application process, I'll go over all these intricacies. So this is signing up a merchant. Let's see. That's not it. Let's see. You got to find my. Okay. So the application is in the back office. Hopefully you guys can see this. Okay. Most of it is standard information. We also have a concierge application in the back office, which means if you want to do this in 2 steps, where you complete the concierge application, and then we'll complete this application, send it to you ready for signature, you can do that as well. But this has gotten a lot easier, so you may want to just take it on yourself. There's only a few spots here that you really have to know what you're doing in order to complete the application. But most of the application is pretty straightforward. I hope you could all see this. I'll enlarge it a little bit. The tax ID number. SPS is very picky about this package. So the application has to be legible. Try not to fax things back and forth because it diminishes the quality, and SPS will pend it if they cannot read every single word of small print in their application. They're very picky when it comes to the merchant approvals. So to the merchant approvals, we can't get sloppy at all. So, if I kick a file back to you because you're missing a document or the document's not exactly right, and I'm going to go over the supporting documents in a minute, it's not because I'm trying to be difficult. It's because SPS is very difficult and they're going to pend it. And I just know it. I've been down this road with them. Every single thing here is important. So when you see credit references, you can't skip one. You have to, if they ask for two, you have to give two references. SPS will contact the references. So it's important that we have them down here. The information on the owners. If it's a partnership, 50-50, we need both owners. Social security number and driver's license number. Bank account information. Terminal model here. For this, you can put in, there's a few different choices, but most of the time we use the Omni 3750. But there's other models here. For the imager, we typically use RDM 6000 series. So that's where we'll go here. Whenever possible, we try to get a refurbished or reprogrammed machine, and we have to know whether it's a dial-up or an internet phone line. So hopefully it's dial-up. It's so much easier when it's dial-up. If they have voice over IP type phone systems, it can get a little dicey trying to get them set up. Well, the great thing about SPS is their technical support is excellent. They'll walk you through it and make it as easy for you as possible. So if you're purchasing your own machines, you're going to do your own download of the program, and we'll give you the instructions of how to do that. It's a simple call to SPS. SPS will help you and walk you through that download of that machine. It's better if you do it from your place rather than at the merchant, because I've been there. I've been at merchants 3 different times trying to program it from there, and it's not an easy thing. You start sweating it out if it's not going smoothly. So it's better if you can do it from there. If you purchase the machines from us, we'll do the programming for you and send it to you ready to be installed. Okay. The dollar limit, okay, under the services, it goes according to, and I'm going to show you this, the rates and the limits, okay? So hopefully you can see this. This is a little bit blurry, but this is a matrix of the rates and of the limits that you can send out that you can set up a merchant for. So I'm just going to show you here that the left column is different verticals. Now, as you can see, most of them are exactly the same. There's a few verticals that are different. Transmission shops are always difficult. For some reason, and this is for all of our lending sources, transmission shops have a difficult time getting customers approved. I don't know if it's the urgency of the situation, but they seem to have the worst customers, and it's reflected in the more expensive discounts. So the left side here, you have different verticals. If a vertical is not listed here, it doesn't mean it's not covered. We cover just about every vertical with this program, except for pawn shops, except for bankruptcy attorneys, the things that you would, anything having to do with foreclosures. They won't do that kind of stuff. But just about every other vertical is fair game. If you don't see the vertical listed, just use this top, the general, auto. This is the top one that you would use. So here you have the verticals. Here each one of these columns, you have the different lending limits. So as you can see, just as you go up, it becomes more expensive. The discount becomes more expensive the higher the lending limit. Suggest to the merchant that they only take what they need. If you have a merchant whose transactions are all under $1,000 all the time, and this is a great product for that, don't give them $2,000 or don't give them $2,500. Give them the $1,500 limit. Okay, don't give them more than they need. If they have $1,500 tickets, $1,500 won't do it. Go to the next one up, because remember, if they're going to pass on the cost to the consumer, you have to cover those costs into the limit, into the finance amount. So Give them whatever limit they need. It's most cost effective that way. So let's say you have a merchant and you've decided you're going to give them the $2,000 limit, which is good. 2,000 to 2,500 for auto repair. If you're going after auto repair shops, that's a good place to be. The next thing you need to know is this is the discount, the different 3, 6, and 12-month discount rates. So let's look at the $2,000 limit. You're setting up an auto repair shop with a $2,000 lending limit per customer. The 3-month discount rate is 10.95. The 6-month discount rate is 16.95, and the 12-month discount rate is 26.95. So look at the difference between that and, let's say, $5,000, which is the utmost limit. You have 14.95, 20.95, and 30.95. There's a 4% difference across the board. So when I say, give them what they need, it's because of that. It's because of, the higher the lending limit, it becomes harder, first of all, to get the merchant approved. And I'm going to go over that in a minute. But it also becomes more expensive for whoever's fitting the bill for this, whether it's passed on to the consumer or whether the merchant is absorbing it. The last section, the last item here in these sections is the monthly minimum usage fee. So the monthly minimum usage fee also goes up depending on the lending limit. So at $1,500 lending limit, you got a $35 monthly minimum usage fee, 40 at $2,000, 50 at $2,500, 60 at $3,000, and $100 at $5,000 lending limit. So this is in the office. It's the rate sheet. It's called the SPS rates and limits. This is something, if you're selling this product, you should print this out so you know how to work this with the merchant. So it's very important that you understand how this works, and you'll need this to fill out the application. So, going back to the application, so let's say, let me find this application here again. Okay, so if you're signing up somebody with a $2,000 lending limit, let's say, you're not doing the SPS lease, so you don't have to complete this information here at all. This doesn't have to be completed. You do have to complete the 3-month programs. The terms. So getting back to the rates and limits is a $2,000. So the 3-month term is $10.95. The 6-month term, as you can see here, is $16.95. Wrong place. And the 12-month is $26.95. So that's right off of that sheet. Okay, so far this is fairly easy. You got the equipment here, you got the limit, you got the discounts based on the terms. Next section, the basic setup fee and annual subscription fee. So here, remember what I said? It's $195. That's the initial basic setup fee that SPS charges, and then the annual subscription fee is $95. So you do it as $195/95. There's a one-time pre-authorization setup fee. Now, technically, this is optional. Okay, it's $29.95. It's a one-time fee, and that's the only time they'll ever have to pay it. This is a really important feature. Here's why. This feature allows a merchant to get an approval and then have up to 7 days to process that approval without having to redo it. And they can increase or decrease the amount up to 25% with that same approval without having to go back and get it reapproved. This is really important, and a lot of, even businesses that don't think they're going to need this, let's say it's an auto repair shop, okay? Somebody comes in for the repair, they want to get the approval right away, but they're not going to want to put it through until the job is done, and maybe it takes 2 days to complete the job. So with this setup, with this feature, they can get the approval right away. They get the green light. They do the job. 2 days later, they process it through, and that clock starts ticking on this financing. So this is very important. It's very important for businesses that do work. Let's say you're dealing with a home service business. It's a repair shop, an air conditioning repair, and they want to use this for the air conditioning repair. They do the quote in somebody's home. They want to get the approval. They can call up, do the approval over the phone. It takes about 6 to 10 minutes. They gather the information that they need, and then they bring it back to the office and it's processed through the next day. So it's very, very important. Okay. Statement fee, as I mentioned, is $5 per month statement fee. Monthly minimum. So for the $2,000 limit, the monthly minimum here is $40 per month. Okay, we're going to skip this unless a merchant wants this. This is a check conversion with guarantee feature. So if you have a merchant that takes checks or wants to take checks, by taking this feature, they can take a check, get it guaranteed. It's not warranted; it's actually guaranteed. And they could take that check as though it was cash. The customer can walk out. They can process that check. If it bounces, SPS covers them. So if that's a feature, and the cost for this, I believe, is 1.35. So if 1.35% of the face of the check. So if a merchant wants to take checks, there's no additional cost to do this program. It's all built into here. They just have to, want it, and then they can use the same terminal and same check imager to have checks guaranteed. So that's the one part of the application. As you can see, that's fairly straightforward. The thing with the signature section, it requires two signatures. The first one is accepting the terms as described in these pages. The second one is the authorizing of the ACH for credits and for debits. So it's important to have two signatures on this application. The next part of the application that you have to complete is the fee verification. It's all the same information that you did before, but you have to complete it. So none of this applies. So this is NA. The monthly minimum is $5. I'm sorry. Monthly minimum in this section is NA. The statement fee is $5. Basic setup fee subscription, same thing, $195/95. Pre-authorization, $29.95 if they choose to take it. $10.95, $16.95, and $26.95. Monthly minimum, $40. Transaction limit in this case, in this example, is $2,000. And this you can leave blank. Now, on occasion, it's happened less than a handful of times to me over the last few years. SPS will come in and say, this merchant is not strong enough for us to approve off the bat, so we want to do a reserve account. And what that means is they'll take 50% of every transaction and put it into a reserve account against that'll be held against any losses. And basically, it will sit there while the merchant is on the program. And once they reach the dollar limit of the transaction limit, so if they're approved for $2,000, once the reserve hits $2,000, then every transaction after that is as normal. So it happens very, very rarely that SPS comes back and says we want a reserve account, but it does happen on occasion. And this is the signature section right here, same thing. Okay, so those are the only two sections you have to fill out on the application. Let me see. Now I'm going to show you the paperwork. Okay. This is the support documentation. So you sign up the merchant, you complete the application, and now you have to compile the support documentation. Okay, so the first is the application. You need the owner's driver's license. Now this is very literal. Okay, this is what SPS needs: the proof of the federal employee ID number. So it's the SS4 acknowledgement letter or the first two pages of the tax returns, not self-prepared. So it's got to be one of those two things if it's a corporation. If it's a sole proprietor, they can do a copy of the Social Security card. So it's this is very important. This documentation, I can't tell you how many files I've had pended because this documentation wasn't exactly right. They need a business license or certificate of articles of incorporation. It's a proof of business. Copy of the business checks. Two most recent bank statements to summary pages. Now, here's why this is important. What SPS is looking for is the ending balance. So if you have a business and they're asking for a $5,000 per customer lending limit, if you submit bank statements and you show them having $150 at the end of the month, SPS is not going to approve them for $5,000. Okay, $1,500 they'll basically approve everyone, but after that, the ending balance of the business has to be higher than the lending limit. So why is SPS so concerned if this is a non-recourse loan? Here's why. If you're dealing with an auto repair shop, let's say, if SPS is dealing with an auto repair shop and there's 10 outstanding loans, payment plans going on, and that auto repair shop goes out of business, the motivation for the consumer to continue making those payments becomes very minimal. The losses for SPS will be very large. So what SPS is looking for is the health of the business. So they're not looking, this is non-recourse. If somebody misses payments, they're not going to come back to the merchant on this, but they are going to look, they do want to do some vetting of the business to make sure the business is healthy. So what you're looking for is you just want to make sure there's not a lot of NSFs, obviously, not a lot of negative day balances, and the ending balance has to be close to or hopefully higher than the lending limit that you're trying to get them set up for. So SPS is not the easiest program from a logistically or even from a vetting standpoint to get approved for, but it's much easier on the consumer side, and I'm going to show you that in a minute. And then the last document you'll need, if you're having us collect your payments, so if you're having us collect your setup fee and you're purchasing the equipment through us, and it's a purchase, so we're collecting money from the merchant either by credit card or by ACH, you have to include a payment authorization form that tells us collect this amount of money for us. Now, those of you that are new, BCMS pays out on the 5th and the 20th of the month. So everything from the second half of a month is paid out on the 5th. Everything from the beginning of the month to the 15th of the month is paid out on the 20th. So, but the clock on the payout is when the merchant is set up. So it's not when the money is collected, is when the merchant is set up and verified. So until the merchant is approved and set up and verified, it's not really a client for us yet. So if you're going to have us collect the money, just know those guidelines. You're welcome to collect the money yourself. If you have a corporation and you want to have the money made out to you and you just pay and you want to buy the equipment from us still, just submit the payment authorization with your information on it. If it's different than your checking account, we already have your checking account on file. We can just pull, the $295 from your checking account. When you're submitting a deal, let me just go back to here and show you. When you're submitting a deal to us, I just want to go back to do this. This is a new client. In the back office, you'll see a new client submittal form. It's an online form that let me click on it to show you. It's an online form that basically allows you to enter your deal in. You submit your entire deal. You can even upload all the documents for it. You click submit, and it automatically comes to us and gets processed. You don't have to do anything else. So, that's the easiest way to do it. I'm trying to encourage all the agents to do it that way. Okay. So that's the soup to nuts for setting up a merchant. Any questions on that before I move on to the client side and show you how the program works structurally from a merchant standpoint? Okay, so I'm going to move on. I'm going to let me show you what a merchant will do in order to set up a customer. So the first thing is this: what we do with when a merchant is signed up, we give them this calculator. SPS also has one on their website. I'm not going to go through it now. So there's two ways they can do it. Our calculator is better because it allows them to show it shows all the options in one view. The SPS version, you have to decide ahead of time what you're going to go over with the consumer, the 3 months, 6 months, or 12 months. So if you're a merchant here and you have a customer and the ticket comes out to $1,500, okay, so you're the merchant, you go in, you plug in $1,500, okay. There's a merchant admin fee. If the merchant wants, they can add a certain dollar amount in order to cover their costs. So let's just say in this case, there's no dollar amount that they're adding on. Particular merchant is set up at the $3,000 limit, so the cost is 12.95, 18.95, and 28.95. I've opened up the spreadsheet. The merchant won't see all these fields, but I've opened this up so you can see all the different fields. And this is inaccurate. It's actually $2.95. In addition to the warranty rate, there's an additional $2.95 for every transaction. So if it's a 3-month plan, there's $2.95 times 4. If it's a 6-month plan, it's $2.95 times 7. If it's a 12-month plan, it's $2.95 times 13. This is the warranty cost. So this is the actual cost that is tacked on to the financing. So as you can see, it gets more expensive 3 months, 6 months, and 12 months. Now, this is assuming that the merchant is going to pass on 100% of the cost of the consumer. They don't have to. They can absorb some of it if they wish. For the purpose of this, they can, we're assuming that they're, going to pass it all off. This is the grand total. This is what SPS will ultimately collect. So if the consumer chooses, they can pick a 3-month option that will cost them $1,736, a 6-month option that will cost them $1,876, or a 12-month option that will cost them $2,165.17. Okay. The down payment. This is 25%. Remember, it's not 25% of the $1,500. It's 25% of the total. So this is the down payment that the consumer would have to make, and this money has to be in the account at the time that the merchant goes for the approval. So they can't put it in the next day. If the money is not there, the merchant should tell the consumer, go get the money in the account, and then we'll put it through. So that's one of the things that obviously SPS does as part of their approval process to make sure that first payment is there. So that's what the down payment is. And then if it's a 3-month option, there'll be 3 additional payments of $434.18. Or if they do a 6-month option, there'll be 6 additional payments of $234.52. Or if it's a 12-month option, there'll be 12 additional payments of $135.32. It all comes down to, as in all cases with financing, and this is financing because the merchant is passing the cost on to the consumer essentially. So it comes down to payments. So the consumer in this case has 2 things to weigh: the amount of money that they have available to them for the initial down payment, and how much they want to pay monthly. How much can they pay monthly? So at the end, if the merchant is doing this, they're going to get $1,500. So they're getting the entire ticket. The consumer has an option of not having to come up with $1,500. They can come up with a reduced amount of money to start, and even though this is significant money, it's better than $1,500. And then they can pay off the rest over time. So this is the first thing the merchant will do. The merchant will present the consumer with these options. The consumer picks which one that they're going to do. Okay. The next thing that the consumer will do, the merchant will do, is they go and they will complete the security agreement. So this is basically a summary that will be sent over to SPS of the transaction. So they're going to collect the check for that initial down payment that we just showed in the calculator, depending on which term. They collect that one check. Now that check is not going to be deposited by the merchant. It's going to be processed by SPS, but it still is a physical check. So the consumer makes out that check for that amount of money. The merchant enters in the check number, the check amount, and the check date. They enter in each debit amount going forward and the number of debits. So if it's a 3-month, they would say $434, blah blah blah, times 3, 6, 12. They work right off the calculator. They put the grand total. These numbers are coming right off the calculator. This is all the information the consumer has to submit: their name, their street address, social security number, state of ID, home phone, work phone, employee business name, and years employed. That's it. There's nothing about income. There's nothing, no other documentation. That's the only part that the consumer has to complete. The merchant completes the rest. The next thing the merchant will do is merchant will take this, and this is I'm going to show you this 100%. This is the actual size of it. It's actually the size of a check. And the reason that it's the size of a check, this is all supplied to the merchant, is that this will fit into the check imager. So it's the size of a check. The merchant then takes the physical check, takes the photo ID, goes to the terminal, goes to the Omni 3750. They'll be prompted to enter in information. How much is the amount? How much is the term? Blah, blah, blah. Then they'll be prompted to scan these through the check imager. They're gonna scan the. They'll also through the terminal. They'll be given the option of swiping their driver's license or entering in the driver's license numbers. They'll go to the check imager, swipe in this security document. They'll also swipe in the actual check. Click process, and then a receipt prints out. And this is the kind of receipt that will print out depending on the term. They'll get a receipt that one is for the customer and one is for them. They give the customer their receipt, and then they're good to go. They know their money is going to come in 2 to 3 business days. The consumer knows that initial deposit is going to be taken out of their account in 24 to 48 hours, and they know what their payments are going to be. It's 12-month payments. It's not bi-weekly. They know exactly 12 months from that day. They have to have that amount of money in. They can go get their work done. Their car work done. They can buy the furniture they wanted. They can do whatever. They can buy the legal cert. They can pay the retainer. Now they're good to go. And that's the entire process from the standpoint of the merchant. It shouldn't take the merchant more than 15 minutes. So the great thing about this program is it's much easier than some of the other programs you have for the merchant. It's much more black and white. So the merchant knows exactly what the costs are. They don't have to worry about discounts as long as they're passing it on. They know what it's going to be. They know how to do it. It's one phone call. And that's the part I skipped, by the way. So once they have the security agreement filled out, this page here, they would make a toll-free number to SPS. Takes about 6 minutes. They would get the approval, and then they go and process it through the terminal and through the check imager. So the whole process shouldn't take a merchant more than 15 minutes or so if everything goes smoothly, and then they're good to go. So this program is very powerful for those merchants that need anything from a few $100s to $3,000. And the great thing about this is transactions that are $3,000 are not dealt with any differently than those that are $500. SPS looks at them all the same. So then, because they're not looking at income, because they're not looking at anything else, they're vetting the consumers exactly the same way. And as I mentioned, they're reporting about a 70% approval rating right now, which is very, very good. So this is a powerful tool to offer merchants. It's a way for you to make money. You can get the upfront fees, especially if you do leases. If you want to know how leases work, I can, let you know. It's in the back office. The formula of how a lease works and how to calculate your commissions is fairly easy. And it's a great, like I said, it's a great program to offer to get your foot in the door. You guys have any questions? No questions at all. Any comments? All right. Well, if nobody has any questions, I'm going to end this call, and then we'll if you have any questions privately, feel free to email me. This is a great program. I suggest you become familiar with it. I'm going to put this in the back office. Everything you need is back here, by the way. You have some flyers. You have you possibly can need. You have the calculator that I just showed you. The rates limits. I just showed you. So everything is back there for you to make this program a success. So if that's all there is, I wish you the best and have a great day.